Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. I'm just going, oof, day's over. I'm so happy. It is Thursday, November 16th, 2023. And it's not, I don't have wrong positions or right ones. It's a frustrating market right now, trying to catch it. Everything got thrown off when the market reacted so dramatically to the CPI number earlier in the week. And I think you know that. Now we're into what is good news. Is good news bad news? Example. Now you're looking to say, okay, do I want to see on the jobless claims the numbers going up and the continuing? They went up today and the stock market came back and held alive. It's not breaking very much right here. The secondary buyers are showing up on the break. You were down about 140 points in the Dow. It snapped back and came roaring back by day's end. Markets just don't want to stay down here. Everybody's scared they're going to miss something. Energy prices down dramatically again today, a $4 drop. This is not a small drop. That $4 is a huge drop. You took the market from 81 to 77 for all purposes in the Brent. We just heard from OPEC with their big report how this quarter and the next are going to see tightness in the market. You're not getting tightness. If you saw yesterday's report on the API, you actually are saying the market's very well balanced right here. You get a bit of a pullback in one area, be it gasoline, heating oil, or the crude itself, and the other areas build with it. But we're not tight, not at this point in time. And I think that's very, very important. And I think that's part of what's there. Then we look at the bonds and the notes. So they're going to be looking and saying, well, which way? Well, it's down. This wasn't just a break where you lost a half a point in the 10-year. It hasn't snapped back. It could, but it hasn't snapped back. And I think everybody's looking at the market and going, okay, you didn't snap back very fast. That means the Fed is done. And I think that's what the market is accepting. When we take a look at the weekly chart of the E-mini S&P, you can see you're over what I call the line in the sand, the 18-day average of closes. You stay over that, I'm definitely then with an upside bullish bias. If you're over that number, I'm bullish. If you're under, I'm bearish. The concept. Then I take a look at how this market has come up here. And remember what I told you. You could argue that this is a shoulder, another shoulder, and a head. It's called an inverted head and shoulder. You grab the head at 4,100. If the shoulder's here roughly, I'll just say 44, 47 would be where the head would end up, and that's a target. It's one way that people look at it. It's interesting to do. If it were 3D, I'd be able to flip it, and you would see exactly what I'm saying. What is the trend right here? Well, in this market, you don't have, in the swing line of trend, we certainly see the market's gone up. We're not blind. And the bias has been up all the way since you got over the 18-day average. You can't go, the way I teach charting, you can't go short is a position when you're over that number. You can only go long. If you don't get a buy signal, fine. But it's one of the filters that I use, and it has really served me well in my long, storied career. Now, if the market can take out, let's see if it's even done it. The high today was 45.2950. If you take that out, you're knocking on the door, you're just at 45.29 1/4, then you move another arrow pointing up here, and then you could say you got higher highs, higher lows, okay? Obviously, you'd be worried, are you going to get an outside day to the downside? But you don't play for that. You don't get that many of them. Where would it then portend the market to go? Believe it or not, the 46.06 level could be there. Tomorrow, by the way, in individual stocks is option expiration day. It's November 17th. That could have an impact in this market. It has come up, and there are people that write options. If they're the wrong way in this market, tomorrow those go off the board. There could be short covering, especially. I say short covering because the market's gone up, and the guys that would be in trouble are those the wrong way that have written options. When we come here to the embedded reading, it just tells me that you got to be a buyer. My problem, I'll share it with you. I hate the idea of buying on the first challenge over a 100-day average when we haven't been there since mid-September. Now, it's not that far ago. It's only 8 weeks. If this were 6 months ago, for sure, you couldn't get me doing it. So was this break just a temporary phenomenon? That's one way to look at it. I don't know. I don't like doing it, I can tell you that. In the NASDAQ, very friendly, embedded reading, and you might be getting a bullish crossover here, where the 18-day average is only about 190 points or so away from the 100. And if you get a crossover, that's really bullish. Then you have the 200-day average, you'd have the 100 right over that, and the shortest term average, the 18 over that. That's just a massively bullish signal. So things you have to watch. The Dow, the same thing, fully embedded reading. Again, I hate buying over that first move of the 100-day average, but this rules my world, not that. When I lose the embedded reading, then away you go. But until you lose it, the pullbacks in the market are the way to go. You got to close your eyes, put in your orders, and go, as long as you stay embedded, I'm staying with you. Please don't lose it. It sounds nuts, but it's true. In the Russell, it's the weakest of the indices. And I haven't changed my opinion on what I said. Because interest rates have changed, there's been a watershed event here, and people are really, they're looking to join this more than any of the other indices. All I hear on TV all day long is how these stocks are the undervalued ones and you want to rotate into them. Well, that's not what the chart work is saying. The chart work is saying, yes, you had a heck of a run to the Bollinger Band and you're overbought and profit taking's underway, and you have resistance between here, the 100 and 200-day average. Okay. In the 10-year note, are you going to develop an embedded reading over time here? If the market goes further up, big resistance, the 109 level, the Bollinger Band, and the 100-day average. But you are overbought. You're not embedded at this point. In the 5-year note, it's identical. Right up here to the 100-day average and the upper band are together. That should be your resistance. Again, you're overbought. I teach that's where money should be off the table. In the dollar, this is where I think short covering is taking place. First challenge of a Bollinger Band and a 100-day average. Duh. That's where I think the pros are doing it in an oversold market, and in an overbought market, the opposite. So the CPI threw everything bananas. And you're in zones that, I realize people will say this time it's not going to work that way. Prove it. You're still in a resistance area. Prove that you can get through it. British pound is acting as I would have thought. You went up to the 100-day average in green, the 200-day average in gray, the Bollinger Band, and you ran into a wall there. But I think big support will be looking at the market at the 122.69 level, but you are overbought. This is a time where I got my hand right here, and I'm very cautious about it. Bitcoin got thrown back again, and there's still nothing there. I read an interesting article today in MarketWatch that is claiming that the event, which according to the court rulings, by January 10th, the SEC has to, unless they can find a reason to challenge everything in courts, issue these crypto exchanges for spot, not futures. And people are saying that'll make it a true asset class. I don't know if that's right, wrong, or indifferent, but they go, this will change the factor, like I said, they think I'm wrong, where it's been the buy the rumor, sell the fact when that comes. They think it's going to be the opposite. It's always good to hear the opposite side. They give reasons. They talk about assets outstanding. I don't buy into that. I do buy into the theory that once you're there on the spot, do you need the futures contract as much? Because it's just going to be a spot price. Unregulated, I understand the SEC being upset. I'm being a gentleman, looking for the right word. Because Once you move to the spot, where are the controls? Okay, futures are very controlled. Try to trade stocks, very controlled. Anything on a stock exchange is a very controlled item, futures exchange. When you move into it, into what we call the pink sheets, if you remember what those are and different things, you're in the Wild West. So I don't know. Brent versus WTI, as long as it stays under the 18-day average, I'm still in the bear camp. Now, you did today hit the Bollinger Band. You know what I'd be telling you. You're not embedded. This is where you cover shorts. Same thing in WTI. This is the short covering area. The market hit these zones. It held the support, got the bounce. There, the 100-day average acted as a resistance point, and then you slid through. You've already broken the wall of support or the floor of support when you come back through again on the 200. And so it's no longer a support zone. It could be a resistance on the way up. Another thing that happened, and it's always fun to look at these things. I just told you the other day, here's where we're at. This was Tuesday. Here's yesterday. You got your bearish crossover. The 18 went under the 100. You normally make a new low for the move. Kaboom. Got to learn these patterns. And by the way, in a lot of our free offerings, we talk patterns, we show them. So we'll be there in a minute. Take advantage. This is all free goodies that we have for you. Sign up, take them all. In the heating oil, lower highs, lower lows. But look at the number, the 200-day. So you came back, you stopped there, okay? Could go right through it. Should the market go, the word should is an interesting word. Should the market go down here? Well, I think it should, or make a new low from that low. Why? I'm going to walk you back through it. 18-day average over the 100. Got your cross. I'm looking for a lower low. Got it? Natural gas, just bearish, and they keep adding into the supplies. Now, we're 66 degrees in Chicago today. This is November 16th. We're going to be 30s next week. But if it's going to be another mild winter, according to everything again, you're not going to use those supplies up. And we are producing in America record amounts of oil. And if we're extracting record amounts of oil, we're producing natural gas. It's a byproduct. Guess what? We're going to just keep building supplies. This is a bearish market. And the question is how bearish, and we'll be talking about that as all time goes on for us. So you heard me talk about all this. These are the free offerings that we have. You see how this works. Click the blue button, you do that. And it sets you up with your cart. And then everything that you want, you go in, read about it, give it a click. And then when you're through, at the very bottom of the page, you're going to see that that's where you put in your name and your email so we can send everything to you. We get it out typically within a business day. All right? So that's how you get it. We're going to mail you. Everything we did here, we created in a way, it'll be PDFs, it'll be a link. The exchanges to the exchange will come right through our trading kit. They'll magically lock you in where you want to go with all that. But all these different indicators, technical tools, the courses that we have, the free courses, charting software to give it a try. We have, by far, the best pocket app for your phone, Android or Apple, that I have seen. I try them all. So if there's a Schwab one, if there's an Interactive Broker one, if there's one from Public, Robinhood, I try them all at some point. I like to see what they will do. I think we have the best. Number one, I can read it. You ever notice how small the type is in these things? You can't read what they're doing. Then you look at a chart. You can't even make it out. We created ours so that they're useful. And that is the main thing, all right? We do what we can, and we think we do it well. So choose what you want. You go to iraepstein.com. And then on the left, you'll see free offers. You can move your cursor to the top here, give it a click that way, and you'll be there. I'm Ira. I wish I could make things more interesting. I'm frustrated with the markets right here, but that happens. You put your hands in your pocket, and you go, there's always next week. You take care.